So good afternoon, everybody. I hope you're all well, and a warm welcome to all our guests and the audience that have joined us. I can see quite a lot of names in the guest list, and I know quite a few of you. So again, uh, hope you're all well and safe. So I think just wanted to introduce myself. I'm Zubair Patel. I'm the head of tax and corporate services at KPMG in Kuwait. And what we have started to do from now onwards, we will start our a regular webinar series by KPMG. So you will see quite a lot of webinars being conducted by the firm and will be offered to you, I think, on an ongoing basis. So we look forward to obviously engaging with you throughout the year and onwards on these topical issues which are coming in. So today's topical issue obviously is an area where, when I speak to clients, quite a lot of the clients actually, this is the first thing that they ask us that, look, I've just got a pure supply arrangement or an offshore supply, how to deal with that. We want the 5% retention back. So I think these are the discussions, that are just sort of coming out, when I speak to clients. So I think it remains a very, very pertinent sort of area of discussions, applying for an advance no objection letter. And particularly it is related to the release of retention, hence is one of the most important part of the tax compliance process. So with that, I think let me just go through to the next slide, please. Yeah. So Elizabeth, yeah, thank you. So I think one of the important part of the I just wanted to highlight before we start was that, the session is going to be very focused 45-minute session to ensure that, our times are utilized pretty well. We will leave last minutes, 10 minutes for the Q&A. Obviously, we've got a chat function here, so you could ask questions. And where we are not able to respond to a particular questions, we can obviously take that offline later on, because I know that because of time shortages, etc., some responses may require a longer time frame. The session is being recorded, and hence, I think even after when the session is over, this will be shared within KPMG's social media channels. So that is available to you later on. So I think with the time and the clock running, maybe Ms. Or next lines where I introduce our speakers. Obviously, you've met, and I'm just, introducing the whole session here. But what we have, I think with us at the moment is obviously the KPMG tax leadership. We've got Fahim Bashir, who is our partner at the Tax and Corporate Services, and he's obviously been in Kuwait for the last now effectively 16 to 17 years. So I've got quite a lot of experience of Kuwait tax compliance. And he's also joined by Hanan Tariq. He's one of the tax directors within our KPMG Kuwait tax group, and he's got about 15 years of experience in the country. So I think with that, I'm going to hand over to Fahim to go through and start the technical discussions. And I hope you have a great session. Thank you. Over to you, Fahim.
Thank you, Zubair, and hello to everybody. Thank you for joining us. As Zubair said, it's a very topical issue that we get a lot of questions on, and first of our series of shorter tax webinars. We thought it was after that we look at the NOL process and some of the issues surrounding that. So I think, but obviously, there's a bit of background to be set just to where the process or the NOL comes from and why it's there. Really, as you know, that the Kuwait tax regulation do not have a there is a tax retention, however, in place, which requires to have obtained the Kuwait tax authority in order to release the tax retention. And this is the key aspect where, we don't call it a withholding tax, we call it a retention, because these amounts deducted at source are not remitted to the tax authority. They stay with the contractor. And this is the key difference that we see between what we have as retention and withholding tax. And really the whole objective, obviously, of this process that we'll discuss today is how efficiently you obtain this no objection letter, which will allow your contract owner to release the 5%. tax retention. And it is really driven by this retention, which has been introduced to help the tax authority enforce the corporate income tax law. So when you don't have a withholding tax system which deducts tax source and payment, you need another mechanism in order to facilitate, encourage, and enforce the corporate tax law. And this is the retention model that we have here in Kuwait. And it is provided under the exception rules. It's been around actually longer. It's been around since 1985 when this initially was introduced, but it's been formalized in the legislation as well. And that does not only require the deduction of 5%, as we have mentioned, it also talks about disclosure of information. So a lot of clients, somehow may not have focused on that as well in the past, is that finding retention is one aspect. But the other aspect is also to disclose information through submission of contracts and subcontracts to the authority. And there are implications for non-compliance, and this is basically how the corporate tax is enforced, is that with the payer having this obligation, and if there is non-compliance for foreign companies that are already tax registered and filing tax declaration, this can impact their overall tax liability. So the related costs can effectively be disallowed, or during the tax inspection and tax inspection. So as I was saying, that it is linked to the process not only to local companies. For local companies, there is this aspect whereby Article 39 also provides local companies can potentially be liable for the corporate tax for a foreign has not complied and is delinquent in it. So this is again an aspect which local companies are more and more aware of, more and more conscious of. Thereby having a compliance process in place, having a framework in place internally within the finance function to manage a tax retention on vendors and suppliers and service providers. And overall, this framework is where we see a lot of clients asking questions. Okay, what is the most effective way to manage tax retention as an internal finance function? But also the companies that are receiving payments receive deductions. But so, what is the best way? What is the most efficient way to obtain that release of retention? And maybe Hanan, I can ask you, for our regional clients, what have you seen, in terms of the difference that you see in the region and the questions that come from our clients, that operations in other countries?
Yeah, thank you for I think most of the companies operating in the region, they get confused with tax retention regulations and withholding taxes. So as you mentioned very clearly, there is no withholding taxes in Kuwait, and this tax retention retained by the contract owners can be paid back once they provide tax clearance certificate. So this is to make it very clear, because companies who are especially operating in Saudi Arabia and Oman, they know there is a withholding taxes, and they don't have to go through any requirements from tax authorities, and the contract owner, they just deduct withholding taxes and submit to tax authorities. So this is part where I think it should be very clear to understand that this is a temporary retention, and this is not a tax payment, so the companies can get this money back if they are not taxable in Kuwait.
And I think that's the key distinction. That is the key distinction that you see locally from Kuwait versus the other GCC, and actually wider, global tax frameworks that you see. And I think, again, it's really about what is the NOL, and there are a couple of aspects that we need to first consider. Is that your NOL is a letter that is issued by the tax authority. It is not something that is issued by the Kuwaiti company itself or by the foreign contractor. It is something that is issued by the Ministry of Finance, but it is addressed to the contract owner. So what happens is that once you have made the request, the tax authority will issue a no objection letter. This can be contract specific. So the idea of the no objection letter is that it will be contract, and it will be amount specific as well. So what we typically see is that there are two types of NOL. One are One is through when you have a normal compliance process set up, so where your income requires the normal registration and tax filing process, where you have physical presence in Kuwait, full registration and tax been established. And once you complete your annual tax filing and process and the tax assessment process that is here in Kuwait, you'll be issued an NOL based on the revenue that you disclose in your tax declaration for that specific year. Now, and you know, that's a whole different process and something that we will focus on in other sessions. But what we want to focus on today is looking at, okay, where can we bypass the registration, the filing, and the assessment process on the basis that the income under domestic tax law is not subject to tax in the first place. Okay? And this is the whole concept of the direct. And this is also something that we can distinguish between Kuwaiti companies and foreign companies, because Kuwaiti companies are clearance certificates. Clearance certificates for Kuwaiti companies are something that is obtained at the beginning of the year. And it's a separate process whereby, because they are Kuwaiti companies and not, they are issued this tax clearance certificate as a blanket. So this way they can present to their customers on a general basis and have a copy so that they don't suffer the tensions on their payments. This is not the same as when we talk about the objection letter, right? Which basically looks at contract specific, amount specific, the details on the letter, which will then allow you to obtain the release of the pension. Now, there have been some cases, obviously, where we try to get contract specific, but you know, for the life of the contract. So we have also seen tax authority issue no objection letters, which are for the life of the contract. So it's a one-time, one-off application, which you may apply once the contract is executed. So the tax authority will only look at executed contract. And once you have an executed contract which you believe is not taxable, then you may apply to the tax authority and request no objection letter for the life of the contract. And that we have also seen in practice being applied and being issued by the authority. So I think those I think just setting the scene, the NOL is something that is issued by the tax authority. It's contract specific, is normally amount specific, but can be for the life of the contract. And will be, if it's amount specific, then it will probably be issued on an annual basis, retrospectively, once the annual revenue of the invoicing has been declared to the tax authority. So maybe if I could ask you to join in now and go through some of the scenarios that we have seen this advanced NOL route be applicable.
Yeah, thank you, Fahim. For pure supply, Fahim, we have seen many successful cases from tax authorities. They are issuing NOL on advanced basis. Especially, we have seen agreements with the pure supply for equipment or material, including X works shipping terms, are easy to obtain no objection letter for the release of tax retention. But if supply contracts, even they are having services like installation, erection, on-site inspection services, then they have to follow the same route of filing tax return, because it will not be considered as a pure supply contracts. Unfortunately, I think it is also important to highlight here that it's not applied on contract to contract basis, but it's applied on entity level. Let me give one example. I think it will be more clear for the participants who are participating, that if a company is just like having 5 pure supply contracts, one just installation contract in place. So this arrangement will also not considered as pure supply, and the company will be required to go through the NOL process, because pure supply will not be applied here. They will be considered as taxable in Kuwait. And I think it's also important that, sometimes companies, they are supplying equipments from outside Kuwait, but on the back end, there is a leasing agreement, for example. So this is also very important to know that if there are any leasing arrangements, part of that supply, then it will be also considered as taxable, and this will the companies will not be required, will not be eligible to get NOLs. And the same which Fahim correctly highlighted before, they have to go through the filing process. They have to submit their tax returns in Kuwait. So this is like, for the pure supply, and we can also see the case-to-case basis. If you have any specific, we can maybe during the question answer sessions, we can, discuss that. Second, on the services performed entirely outside Kuwait, we have recently seen many successful cases where companies, they are providing offshore design services or offshore consulting services, and they don't have any other presence in Kuwait. They have obtained no objection letter from tax authorities. So that is also tested with tax authorities and very successfully obtained. So this is very important point. Uh, but I think there is one point it's very important for people to know, or to the clients or companies who are joining us, they should know. There are some times that you have arrangement with your contract owner that all the services are provided outside Kuwait, but sometimes, there is visits of officials that they have to come for, like, for inspections or some installation jobs in Kuwait. And such companies, they are exempted from taxes under double taxation treaty regulations as well. But still, if the company will go for no objection letter route and apply for no objection letter in advance, this will not be accepted, because if the company is exempted under double taxation treaty, then tax authorities required that under Article 13, the companies should submit tax returns in Kuwait and claim such exemptions in their tax returns. So this, I thought that it will be good that, if we highlight that this part to at this stage as well. Second part, I think, Fahim, this is very important, that who can apply NOL, because this is most of the time companies are asking that whose obligation is this. So normally, frankly, if you ask, it's obligation and responsibility of contractors. It's not obligation of contract owner. Their obligation is to retain 5% in the law, and contractors, service providers, suppliers are required to clear all their tax obligations in Kuwait and obtain tax clearance certificate for the release of tax retention. But we have seen cases where contract owners or customers, they have some commercial reasons. Because of that, they cannot retain 5%. Sometimes they have global discounts agreed with certain suppliers, and for that purpose, they cannot hold this 5%. If it is withholding tax, definitely that will be applied. But because this is a temporary retention and sometimes margins are very low, so from business perspective, it's not suitable for the companies to retain 5%. So for that, there are some implications. If this is a foreign company, then they have to be very clear that if they are not retaining 5%, whatever costs related to subcontractor, supplier, or service providers, it will be disallowed by tax authorities in their final tax inspection and tax assessment process. If it is a local company.
There is
Sorry.
a question coming. Apologies. There's a question coming,
Sure,
which
sure.
is an important question. So I thought to disturb you a
Sure,
little
sure.
bit. I think we're asking that how much time does it take, say, if you apply for a pure supply of equipment or material, NOL, in our experience, how much time do you think this will take? Thank you.
Thank you, Zubair. Normally, it takes 4 to 6 weeks maximum to apply, but we have to consider now, because of pandemic situation, COVID-19, and government restrictions are there. Company and DIT, especially tax authorities, they are not operating with full manpower. So we can say that another a week or two can be added in this, but normally 4 to 6 months are enough to submit all the documentation and get after the submission we can clarify, because most of the documentation, it's really important, it should be submitted in Arabic language, and sometimes tax authorities, they need some clarification on the contract, especially the scope of the contracts. So you can say, so I think 4 to 6 weeks is reasonable to inform here. You can get pure supplies cases. Even the services provided from outside Kuwait as well, we can say 4 to 6 weeks.
Sorry, I think just stopped my video because I believe there was some sound issues. I hope this is better now. Hanan, we also had a question. We had a question regarding, is there a list of specific sources of income to apply the no objection, advanced no objection route? And that's interesting because, the issue is that this is linked to the taxability of. So why we're saying the no objection route is available so that you can, on the basis that the income is not taxable. Yeah. But maybe you could expand a little bit in terms of, where do we see, why is it that there is any formal guidance in terms of the tax authority providing this NOL route?
Sorry, Fahim, your voice was breaking. Can you repeat it?
Yes, I
Sorry.
think it's Hanan, it was regarding, anything that is within the tax retention which is out of scope, which we can clearly say that is out of scope. Because I know that the law actually, I think, so the response to that question would be, if you look at the law, the executive rules particularly says that all the transactions are included within the tax retention regulations.
Yeah, I agree with you, Zubair, because law is very clear. Law does not specifically provide like details of it should be applied on pure supply or services. The law clearly says all transactions. So I agree with you, Zubair. This is really important to understand. But tax authorities, they are giving for the pure supply, this is easy to obtain, especially where the X works terms are in the purchase orders or in the contract. That is more easy to obtain a no objection letter in advance.
So I think we can move to the next and who can apply for the NOL. I think that's a very important area. So
So
great if we could cover that. Yeah.
as I mentioned before, actually this is the obligation of contractors, not contract owner obligation, because contract owner obligation is to retain 5% tax retention, and contractor is required to clear their all tax obligations or tax payments in Kuwait, and then get a TCCO or tax clearance certificate or no objection letter for the release of 5%. But as we have seen that due to commercial reasons, if a contract owner is not retaining 5%, then there are consequences on this. So for a foreign company, we have seen, Zubair, many times that tax authorities, they disallow that cost in full, where a contract owner is not retaining 5% tax retentions. And this is not limited to foreign companies, by the way. As per the Article 39, local companies are also required that they can be asked by tax authorities to pay taxes on behalf of the contractor. So this obligation should be applied very carefully with all the suppliers services contracts in Kuwait. So Fahim, I think for financial services, this is really important part because this is a little bit tricky. If you want to add something on financial services.
Yes, I'll try, and hopefully you can hear me.
Yeah, we can hear you.
The aspect on financial services is quite interesting because the law does provide that interest and lending activities from Kuwait are subject to tax in Kuwait. However, we have recently seen the tax authority issue certain NOLs to foreign banks which had no physical presence for offshore lending transactions. However, we understand from recent discussions, even as recent as yesterday, that this is still under review. And so whilst past NOLs had been issued, this may be revisited by the tax authority very soon. And what we see there is that, and that highlights the inconsistencies and certainly the aspect of evolving practices at the tax authority. It is a lot of what we do in terms of trying to apply for the advanced NOL is really is based on practice and sometimes a trial and error case. So it could be that, if you're not sure or if internally a company would like to get more confirmation or, as you said, a confirmation on their activities being taxable and a tax return being required, or whether the NOL route is applicable, the suggestion is that you can go for the NOL route. And that through that process, the tax authority will let you know. Either they issue you the NOL, which affirms that you're not taxable in Kuwait, or they will issue the letter to say, yes, you are taxable, and please go file your return. And we see this obviously in other cases as well. And as Hanan, you said, that the retention regulations are not specific; they are very broad. We look at also GCC companies. Also is a hot topic recently, whereby you've got entities incorporated in the free zone. How are they treated? One aspect that has seen some success is free zone companies in the UAE owned by individuals. So again, coming back to the premise that under the Kuwait tax law, the local individuals are not subject to corporate income tax. We have seen the tax authority also take a view that even if you're a free zone entity which is owned by individuals, because you're not subject to corporate income tax, you are able to apply for and obtain the NOL. I know, Hanan, this is a question we get right from our GCC clients. So it's either mainland entities or free zone entities.
Yes, Fahim. Especially companies owned by individual in GCC region, especially in free zones, they always ask this question that whether they are eligible to obtain NOL. So I think it's very clear. You explained really well that they are eligible, and the documentation is a little bit different. And the department who is reviewing GCC companies or entities cases are looking into different models. They are not going into purchase orders or contracts. They normally check the shareholder details. If, for example, companies is owned by individuals, then and in the free zone region or any GCC regions, they can get annual in advance on annual basis, and we can assist on these cases. So
Fahim, another important question that is coming, maybe Fahim, if you could look at that. I think is there any distinction between local versus foreign vendors when considering the tax retention aspects?
Yeah, and again, this is a good question and a common one that we see. The tax retention regulations are not specific, so they say that any beneficiary should be subject to the tax retention, which implies that even whether it's a foreign vendor, foreign subcontractor, or even local subcontractor or local vendor, the retention should be the first step in the process. It is through that then the vendor and supplier will have to go through their respective process to obtain the no objection letter. Or, as we mentioned earlier, the Kuwaiti companies can get their blanket tax clearance certificate, which is issued on an annual basis. So when we look at the retention regulations, no, there's nothing specified. In practice, it should be applied because, even with local companies, you do not know, their shareholding structure, their ownership structure. It is not your, as a payer, obligation to do any due diligence in terms of taxability of your vendor. It is the vendor's obligation to clarify their tax matters with the tax authority and obtain either TTC or the NOL.
No, thank you, Fahim. And I know in the interest of time, great if we can also just cover the process. I know quite a lot of tax retention questions coming in, but I think great if we can just quickly go through that process and for our audience. Yeah.
Hanan, would you like to go through the process just a little bit more? Yeah.
Sure. Normally, if a contractor is applying for this annual request, then we will require a letter confirming there is no services or any other contract performed in Kuwait, and this confirmation should be obtained from a contract owner. Then there is an application. There is a letter which contractor should prepare from their side that they are not having any other contract in Kuwait, and should be submitted with the copies of all their contracts, any addendums on this or any other terms of business added in the contract, and this should be summarized in the letter where they can confirm the scope of services part of the contract in the letter, and they can submit this request to tax authorities. But on the other hand, if a contract owner they want to apply for advance NOL, then almost same information will be there. We have to submit copies of a contract, and we have to summarize in a letter as well. But we have seen recently that tax authorities they ask for a confirmation from supplier as well, because if the specific supplier is having a tax file in Kuwait, or if they are having any other contract in Kuwait, then they will not be eligible to get no objection letter. So especially companies who are participating in mega projects in Kuwait, we have seen that tax authorities, they also ask for supplier or contractor confirmation to make sure they don't have any other contract performed in Kuwait. So this is the general process.
Yes, and I just saw a question saying, okay, is it then the vendor's responsibility or the contractor's responsibility? Here we say it is up to the parties to decide. Ideally, it should be the vendor and the foreign supplier or the local company to get. And for commercial reasons,
I think this is a commercial decision. This should be taken by management.
For commercial reasons, if the contract owner wishes to go and apply on behalf of the vendors, that is also something we have seen, because also it is in their interest, right? So why would it, as I, the local company, wish to do that? Well, it protects me from any undisclosed tax liability. If I've been working with foreign vendors who have not provided me with tax clearance certificates, I do not know whether they have been taxed appropriately or not. So to limit my exposure on any potential tax that is due for them, I may take the commercial decision to apply and clear my balances. So I think that is, again, it is a proactive approach by local companies. Larger groups are doing that on a regular basis. And even large taxpayers who have many vendors on EPC contracts or O&M contracts, they see it is worthwhile protecting their tax base and apply for the NOL from their side as contract owners.
There is a question, Fahim, from client. Okay, what if the customer does not pay the contractor the retained amount after obtaining the NOL? Okay, this is again, Fahim.
I think this is maybe Fahim, you could answer that, but the focus again is this is more commercial. Obviously, once an NOL is issued by the Ministry of Finance, the requirement is that the contract owner should release the retention amount. Of course, if there is any disagreements, obviously this can be then taken to the court of law. But in the essence is that once you're issued an NOL by the Ministry of Finance in the favor of the contract owner, then the amount should be released by them. Yeah.
Yeah.
Absolutely. I think from a tax perspective, from a tax process perspective, once you have the NOL, that is then a commercial issue.
Yeah.
Hanan, maybe we have some time, so just to briefly go over, there is the option of the bank guarantee route, which we have seen, right? I know this specifically provides, this is linked to those customers those clients that are filing and registered. This is something that effectively does support early release of retention.
Yeah, Fahim, I think this is one of the common questions, especially foreign companies participating in mega projects. The tax inspection process is taking long time in Kuwait because the process is connected with a mandatory tax inspection, where this tax inspection is performed by tax authorities, and they have to review the books and then assess the tax assessments. And normally we have seen that it's take long time. So there is a way companies can submit bank guarantee against the 5% tax retention and get their NOL for the release of tax retention. But there is some criteria and there are some limitations in the law which restrict that bank guarantee applications or bank guarantee cases to approve. Like one of the criteria is that it should be like after submission of tax return, it should have at least 1 year pass. If in 1 year tax inspector is not able to commence the tax inspection, then you are eligible to request for bank guarantee annual through bank guarantee. And second is that, for example, if contract is completed or you have submitted the last year tax return and you are not expecting any other variation order, so this can also be one of the requirement where companies are eligible to submit their annual request on bank guarantee basis. But frankly, Fahim, recently during the pandemic time, where most of the companies are having cash flow issues, we have also seen tax authorities approving this NOLs on exceptional basis, where even the 1 year has not been passed, but they have given approvals on bank guarantee basis. So this is also, tested cases. There are some limitations in bank guarantee frame. I think it's important to highlight here that if a company is not submitting tax returns, like for example, you have tax inspection, which is not started for the year, just say 2017-18, but you have not fulfilled the compliance requirement and you have not submitted tax return for 19 or 2020, then still, as you are not in compliant with the laws, then you are not eligible to submit bank guarantee. Second is if there is any delay penalty or taxes due on your company, which is not paid to tax authorities, this will also be one of the reasons to reject your request for NOL through bank guarantee. So these all things I think need to be considered. But yes, I think wherein tax inspection is delayed, companies can submit bank guarantee and obtain NOL for 5% tax retention.
Another interesting question that's come up is, with respect to tax treaties, right? So there's the argument that, look, if a tax treaty clearly provides me exemption from Kuwait tax as per my interpretation, so why do I need to go through the NOL process, or even why does it then the NOL take so long? And I think this is a very interesting point within the tax law, is that if you believe that you are exempt under a tax treaty, actually Article 13 requires you to file a return. So there is an argument that the NOL route is actually not applicable if you're going under a tax treaty exemption basis. The NOL route, the advanced NOL route, is really only applicable where under domestic tax law, you consider yourself as not taxable. Because when we look at transactions, say, for example, material supply with maybe 2 weeks installation within Kuwait, the domestic law says that any contracts wholly or partially executed in Kuwait are subject to tax. Now, yes, the treaty may provide that your material is exempted, and because you spent such little time in Kuwait, you do not create a permanent establishment and you're not taxable. But in order to claim that exemption, actually, you have to register and file the return. So the question regarding why does the NOL take so long if the tax treaty is applied is that because to apply the tax treaty, you have to have filed your return, gone through the inspection process, gone through the assessment process. So therefore, you're in that full compliance model rather than the advanced NOL. And I think that was a good question, because obviously it does come as a surprise sometimes to clients that I'm exempt. I know I'm exempt under the treaty, and in the end result may also be agreed that way with the tax authority, but the process is still there. And time, it does take time. Indeed, it does take time. We've got, again, a couple of questions regarding GCC companies and individuals. Hanan, maybe you could, again, just cover, what is the difference between foreign GCC and the companies owned by individuals, and especially maybe, personal service contracts as well. Yeah.
Yeah, I think as you mentioned before, any company owned by individuals in GCC, they can apply for no objection letter and advance the TCC as well. So they will not be subject to tax in Kuwait. But any company is having any foreign corporate body, even they are registered or they are incorporated in GCC, on that part, I think they are not eligible for apply NOL. They have to again go through this tax filing route. For any local company as well owned by individuals, as Swain you highlighted in the start, they are also eligible to claim TCC. And for companies, like for example, GCC companies owned by individuals or Kuwaiti companies owned by individuals, they can get upfront tax clearance certificate from tax authorities. They are not required to submit any copies of contract on the basis that they don't have any foreign corporate body holding a share in this, and only individuals are the shareholders or are the partners. They can obtain advance TCC from tax authorities. So this can be done in advance. For example, in Jan you can obtain in Jan 2020 or 2021 you can obtain the TCC from tax authorities. You don't have to wait like for NOL and all that. You have to complete the year and then you can submit your request to tax authorities. So this is the difference. I believe that it's very important to understand that for advanced TCC, you can for the companies you can obtain in the start, and for filing road you have to complete the financial year end and then submit your tax returns based on the revenue earned or based on the income earned from Kuwait operations.
This is the quickest way, as I see it. You know, the advanced route is the quickest way. But even then, as we highlighted earlier, it's a 4 to 6 week process, even in when it runs smoothly. So the submission is made, we go to the tax authority, we follow up with the ministry officials to make sure that the process is managed and any queries are answered. Subsequent to which the NOL is issued. And these days, obviously, the NOL is in electronic form. Previously, they used to issue hard copy letters, but now there has been a certain degree of automation within the tax authority. So these are now coming as electronic certificates. Yeah. So then it is still a 4 to 6 week process at best. But as I said, typically it can take a little bit longer, specifically when we're at reduced capacity at the ministry due to COVID restrictions.
We have another question here. Payments from government bodies are exempted from 5% tax retention rule.
So, payments from or to?
No, from government bodies. Maybe the government contracts. I think this is a general I think misperception from. I think the application is there. Yeah.
It's clear. I think the government bodies are very strict in applying their own rules. So for tax retention, certainly we would expect government bodies to be very strict on this process. So if you are entering a government contract, expect the 5% clause to be there in the contract and it to be applied to payment. In the private sector, yes, there is inconsistencies. However, over time, we have seen much more uptake of tax retentions, especially in the private services sector. And also large family groups and enterprises have been very strict on improving their processes, understanding the retention application, and updating their methodology and tax control frameworks internally to ensure compliance in order to avoid any unexpected tax liabilities and surprises.
And Fahim, as we highlighted before, it's obligation of contractor. Anyhow, if your contract owner is not retaining 5%, they might retain at the end of the contract. You never know because there is obligation. But to fulfill the requirement as per the law, it's contractor requirements or obligation to submit all their taxes in Kuwait. So even if contract owner is not retaining, at the end it's contractor obligation.
And this is also a very good point. Is that, say for example, you see your payments coming full without retention, and sometimes that gives the impression that okay, then I do not need to do tax compliance. But I think we need to make the distinction is that obviously retention is the obligation of the payer on the one hand, but irrespective of that, if you are taxable under the local law, then you need to file and complete the obligation as a whole. So that includes, doing your due diligence on what is taxable, what is not taxable, the process, the registration process, the filing, the inspection process altogether.
So I think Fahim and Hanan, it seems to be we've got 2 minutes left and there are substantial number of questions coming through. So I think with 2 minutes, let's try to I think if I look at another interesting questions, I would say that is there any time limit for holding the retained amount? So I think is there a time limit set out? I think to be honest, under the IFRS, there may be a limit, but effectively what we find is that within the tax retention, there is a statute of limitation. But in case of the holding of retentions, what I find is that the companies that in practice hold it until the Ministry of Finance particularly requests for it through a letter. So the difference between a tax retention and withholding tax, and I know just to clarify again, would be that the tax retention is held by the companies with a withholding tax, which is obviously submitted through a withholding tax return to the tax authority. So here it stays on the balance sheet of the companies and can only be reversed out once the Ministry of Finance officially requests for this tax retention to be remitted to them. I think that's an important one. I know we are running out of time. I think we will try to contact people. There's a substantial number of questions out there. But we've also done, obviously, we have got the Doing Business in Kuwait guide that has come out. So we have got a link to that. And obviously, the event feedback would be great to have. I think initially we just had a bit of a loss of voice through because of the internet issues, but I think it got well during time. I think we'll probably revisit this topic again and maybe into, because I can see the question box seems to be completely packed with quite a lot of questions. So we'll probably have another session on this. So again, thank you all for joining us. And again, thank you Fahim and Hanan for, providing your valuable input on this topic. And again, thank you for all the participants for taking your time out during an afternoon. I think it's always tough during COVID when we're all in meetings. So I think taking your time out. So again, very, very thankful for that. And thank you to our marketing and the admin team as well for supporting us on this. So thank you. Thank you very much. Take care.
Thank you, Zubair. Thank you, everyone.
Great. Thank you, everybody. Take care.